So this problem is related to Adarsh Bank Limited, and it requires you to prepare a profit and loss account for the year ended 31st March 2020. These are all the particulars that are given to you, and they have given it in such a way that previous year's balances are given as well as current year's balances. So when we prepare the actual solution, we will make two columns, one for the current year's items or amounts and one for the previous year's amounts. Okay? Normally for companies and any type of banks or manufacturing companies, you need to give this side-by-side comparison of both the years, which is how we do it. Okay? So let's see. These particulars, please understand, this is not a trial balance. Normally when we prepare final accounts for manufacturing companies, we are given a trial balance which balances, which tallies, the debit and credit both tallies. And then we take all the items and put it in P&L and balance sheet, and we tally a balance sheet. Okay, this is not the same here. This is just a list or a statement of all the particulars or different types of incomes and expenses that have taken place during the year. Okay, let's take the first item, interest or discount on advance or bills. Okay, now there are two things here. One is interest on advance, one is discount on bills. We'll try and understand both things. One we have already done. Advance means nothing but loans. It's another word for loans. Okay, so when the bank receives interest on money which it has given as loans or advances, that interest becomes an income. Okay, or it is interest earned. Fine. So even in this case, this interest on advance will be interest earned. Right? Somewhere here I'm going to write it. So what I'll do is just like how we when we are solving a problem, we read the problem and we start writing next to it as to where it will go, right? Which item it will go under. So I will also do the same thing. I will write here Schedule 13. Now what is Schedule 13? As per the pro forma, Schedule 13 is interest earned. Fine. So any interest on advances is interest earned. Fine. I have written Schedule 13 here. Just to make this part clear, what is discount on bills? I'm sure you're aware of the concept of bills discounting, isn't it? Or discounting of bills. So if you have two parties, A and B, right? A has sold goods and B is supposed to pay for those goods. Fine. Now sometimes B doesn't have the money right now, so he doesn't pay immediately. Instead, what does he do? He gives a bill, okay, a bill of exchange to A and makes a promise. He says, I will pay you on, now if today is let's say 13th of February, he says I will pay you on 13th of April. Give me 2 months time, right? So he gives a bill. He makes a promise and says, I will pay later. Now, our Mr. A, who is the seller, he doesn't have the patience, nor does he have the time to wait for the next 2 months. He would like the money right now. Okay, so let's say he was supposed to pay 10,000 for this goods, and A now has the bill with him. The bill of exchange is there with him, which he has accepted. So what can A do if he wants the money right now? A can approach a bank and do something called discounting of the bill of exchange. Now what does discounting mean? A is going to present that promissory note, that paper, the bill of exchange, to the bank, and he will tell the bank, please give me this money, and then this party is going to pay you the money later on the maturity date, which is 13th of April. But right now you give me that amount that is written in the promissory note. So what does the bank do? If the promissory note has 10,000 mentioned on it, the bank is going to take that 10,000, it will minus a small amount called a discount. Discount is nothing but the bank's commission for giving you that money in advance. Okay, it will minus that amount, and the remaining 8,000 it will give to Mr. A. Have you followed? I'm just giving 2,000 as a random figure. It depends on what is the discounting rate that banks use. Okay, so discounting is nothing but that commission which the bank takes so that it, for paying you the money in advance. Otherwise, A would have to wait till 31st of March, 31st of April to get that same amount from Mr. B as per the promissory note, as per the bill of exchange, right? But instead, A can go to the bank right away and discount the bill and get at least some money, if not the entire amount, isn't it? So for giving you this convenient facility, the bank charges a discount. The discount on bills. That's why this discount becomes an income for the bank. This is exactly what it means. Discount on bills. Okay. Next one. You have something called income on investments. Now understand that banks also make investments. They put their money into the shares of other companies and so on. So for that also it will go under Schedule 13, which is your incomes, okay, or interest earned. Now this is amounts that have been deposited by the bank in other banks or kept balances with other banks, and they are earning some interest on that, right? So that becomes your income on investments, and it will also come under Schedule 13, which is interest earned. Done? Then another type of interest earned by the bank is on the balances which it keeps with RBI. So every bank, as you know, according to the cash reserve ratio, has to maintain some balance with RBI, alright, without giving it away in the form of loans. So for that balance which is kept, the bank again earns some interest, right? And this interest on balance with RBI will also come in Schedule 13. That is your interest earned. Done? Then we have the next one. Commission, exchange and brokerage. If you look at the pro forma, we also have something called other income. Schedule 14. Okay. So commission, exchange rate or brokerage is not interest. It is not under interest earned. So we will put that under Schedule 14. Other incomes. Similarly, any profit you make by selling investments. Let's say the bank had shares of some company and now it makes profits by selling off those shares. That again is Schedule 14, other income. Right? Now, interest on deposits. We have made this clear distinction here that when the bank receives interest on loans and advances, it is an income for them. When the bank pays interest on deposits, it is an expense for them, right? So same way here, interest on deposits is interest expended and it will come under Schedule 15. This is an expenditure. Look at it from the point of view of the bank and not you as the customer. For the bank, that deposit is a liability. And for whatever deposit they take from the clients, they will pay a certain amount of interest. Okay? And also, interest on RBI borrowings. That means the bank has borrowed some money from RBI and it now has to pay interest on that money which it has borrowed. So again, interest expended, Schedule 50. Alright, I hope up to this point it is clear. There is a very clear distinction between what is an expense and what is an income for the bank. when the bank accepts deposits from clients, it will pay interest. When the bank takes money from RBI, it will pay interest. So these two will come under 15, interest expended. Okay. Now other things like whatever is paid to employees, that is salaries, rent, printing, advertisement, depreciation, directors' fees, auditors, law charges, postages, all of these. In fact, it's a very simple problem up to here, sorry. All of these are going to be part of your operating expenses, which is schedule 16. Okay, so all the other types of expenses that don't fall in any of the previous categories, they are neither incomes, they are neither interest expended, or nor they are interest earned. They are just other type of expenses or day-to-day administrative expenses that are incurred by the bank. Okay, so those will fall under operating expenses. So it's a very simple problem where you just have to list out all these under schedule 16. Okay, and then we have a few adjustments related to tax, which we can calculate only after we get the profits done by the bank during that year, and other adjustments related to appropriations. How much should go to statutory reserves, other type of reserves, how much dividend is supposed to be paid by or proposed by the board of directors, and how much it was last year. All these will come in the appropriation section once we have arrived at our net profit. Okay, so that was the whole discussion. That was what or that is where all of these items in the problem are going to be posted. And once you know where to post them, the rest of the solution is extremely simple. You just need to make your schedules, take the total, transfer those totals to the profit and loss account.